Hey guys, welcome to this week's episode of the Swyftx Squawk, and it's a bit of an important one. Starting to see the market really start to turn up the gears when we're looking at price action. We're seeing fear metrics when we look at fear and greed indexes like this one on CoinMarketCap drop to levels that we haven't seen, well, really at all in all time. This is looking back all the way back to 2023. And there'll be different varying indexes out there that measure like a similar thing in terms of sentiment, but really, sentiment's really not been this bad in a long time. And really, we're seeing it in everything around us, right? We only have to look at asset prices to see just a very stark change in what prices were trading at not so long ago. The likes of Ethereum down 30%, Binance Coin down 29%, XRP down 34%. The whole market is really feeling this one. So what we wanted to do today was just provide some further clarity as to what could be driving a lot of the sentiment, particularly under the hood when we look at how the market's moving, dive into some of those dynamics, as well as talk about the stress test overall. Where could we be looking at as a destination for price action in the short term? Where could we start to see support start to form? And for this particular one, I want to dive into specifically the US exchange traded funds, or the ETFs. And this has been a real success story for the industry and over the last 1 to 2 years for the new entrants that we've seen come into the market, the buying pressure. But at the same time, the way I see it, we're also starting to see how we can start to influence the sell side pressure as well. And I'll explain that very shortly. But when we look at overall the Bitcoin ETFs, this is looking at Farside data, which you can access yourself at farside.co.uk. It shows that we have seen that acceleration in selling up all the way through as this downturns progressed. But what I want to really zero in on is a couple of these particular products. And using on-chain data, we can actually look to understand what was the potential average buy cost price of these ETFs. So a lot of the ETFs, they may trade during the day. And then when it get to the end of the trading session, they'll generally settle and move the assets in between custody solutions, which often require on-chain transactions. Now, the beauty of this is blockchain transactions are transparent for all, right? A couple of clever people have identified where these wallets are, or a group of wallets that are likely to be these ETFs. And then they've started to plot out, okay, what was the average buy price of these inflows when they were coming into cold storage, right? Or into their custody solutions. So we've got here the IBIT, the FBTC and ARC-BTC products, which we can see that in the top 4 when it comes to total allocations across all the products there today. Now, I want to read a couple of these key figures here. We've got the IBIT at 80,500, the FBTC at 58,900, and the ARC-BTC at 41,600. So what does this all mean? At the end of the day, if we take the idea of on-chain data as showing us the footprint of buyers and sellers, what was the average price that they paid for something, we can overlay that with a general ideology that as market participants see the market falling, as moving closer to their cost basis, even lower, it may start to precipitate some of these sort of fears of panic selling or trying to get out for not too much of a loss, which can really start to increase the amount of sellers that show up on a marketplace as opposed to buyers. Because that's all our market is, prices moving up and down due to the availability and intensity of people buying and selling. In a market environment where there's not enough people selling, we start to see price move up as everyone's happy to pay more. And the same as goes for the downside, right? Which is what we're experiencing now. Now, if we particularly look at the IBTC product and its cost basis of 80,500, we can really start to see that is about that key level there. If we move across on this chart here, we really start to see price accelerate. And what's interesting with this on-chain data is when we blend together the true market mean, what's the average price overall, that also lands at about that $80,000 figure as well. So really, if we're talking about this idea that the market is potentially trying to break even on itself, the average amount of people are really starting to increase that sort of selling pressure right here, which is what we're seeing right now. Now, obviously, our key question here right now is, will we see this continue? Will we see price go lower? None of us know really. That is the key thing to take away here. But what we can do is really turn to these on-chain data points and start to see how do these products now behave as we bounce in between these ranges. We have this range here between 80,000 and 58,000, which is the next product, the FBTC product. If we start to see net buying on these products, that could be a potential signal that the market is accepting and willing to pay the price to pick up Bitcoin at the prices that we're seeing prevailing. But at the same time, if we do see markets maybe go stagnant, stale, drift sideways, and then as the market has a chance to rally, we see selling come in on these products, well, that kind of maybe paints a story that we could be heading to these lower tranches and we could potentially see $40,000 Bitcoin. But the inverse of that is true as well. Obviously, if we do find that the market maybe flips this level, as we have seen in the past, there has been some pretty key sentiment towards these price levels. If we move back to the middle of July 2024, it can oscillate and it can spend some time, obviously, rebalancing and rebasing. And then we can see the market may push away as well. So we can build both the bearish and bullish case as well. But what it does give us is potential lines in the sands to start to watch these products quite closely and see how the market's reacting. So I hope you found this insights today a bit useful. Let us know what you think in the comments below, but we'll be back again next week to fill you all in on what's happening. Thanks, guys.